I'm Charlotte McLeod with investingnews.com, and here today with me is Rick Rule, proprietor at Rule Investment Media. Thank you so much for being here, but really, as I always say, I'm here with you because we're at your conference, the Rule Symposium.
Well, thank you for coming down, and thank you for a decade of support of the Rule Symposiums. You've been a great partner, so thank you for that.
Thank you as well. I think it has been a long time, and this one is, I think, one of the favorite ones yet. So I want to start. We've made it to the end of, I think this is the third day at this point. They're blurring together in my mind, but I wanted to begin by asking your takeaways, key things you've learned from the presenters on the show floor. What are you seeing?
Well, it's an interesting conference this year because what we said would happen the last couple of years happened this year. We talked about, as an example, the gold market and the gold equities market as a cold spring. And people liked our reasoning in 2023 and they liked our reasoning in 2024, but they liked the money a lot better. So the mood of the conference, I think, has been much better. We were able, as a consequence of that, to do, I think, a reasonable upgrade of some of the speakers, which was very useful. The panels, I think, were particularly good. I don't know if you were able to see the macro panel. Those can go very, very wrong. And the macro panel this year went very, very right. There was disagreement on the panel, which is healthy, but it was professional disagreement. There was no shouting. There was none of that. There was no grandstanding. There was no politicking. People made a lot of really good points. And I guess what I need to say, Charlotte, no offense to those who weren't with us this time, is after 30 years, people who don't perform, speakers, you allow them to do other people's conferences, not your own. And I think that's really helped a lot. The other thing that's happened here is that we have a coterie of investors who've been coming to this conference for a very long time. They participate in the Rule classroom, so they ask the exhibitors intelligent questions. The exhibitors appreciate that. They compare notes with each other. There's begun to be a community around this conference, which is very helpful. There's a whole bunch of work that we don't have to do to prepare people because they come here prepared.
I agree. I think I've talked to a lot of people attending, and they're all very nice is one thing I'll say about, not that they're not at other conferences, but I've had so many good conversations with people. And that was another thing I wanted to bring up to you. So these are educated attendees who are coming to listen to, of course, very educated speakers. What kinds of questions are you getting? I see you talking to people all the time from the attendees. What do they want to know right now?
The smart ones, I think, are saying what could go wrong. They're asking questions that are specific to their portfolio. But they're actually asking the questions well. It's not, what do you think of XYZ, but how much XYZ should I own in my portfolio relative to my age, relative to my net worth? I mean, the overall level of the questions that we've experienced really in the last 4 years has gotten better and better and better. This year, the best. As you know, Charlotte, I've done in our interviews, I've told you frequently that I love hate, that I don't need psychological affirmation. What I prefer is to find something that isn't widely followed, that I like, that I understand, and buying it. And a lot of people now are not saying what's hot. They're saying what's hated. Where's the next opportunity? Where's the contrarian opportunity? Where's the unloved commodity that has a big deposit that's cheap? Yes, it could go down, but it could go up. Those are good questions.
Well, and now I don't know if you'll believe me, but that was going to be one of my questions, because you are always telling us you love hate. So what is the most hated right now?
There's a few things that are hated. Oil and gas is still hated. It's treated me beautifully for 5 decades. Some years good, some years bad. The last year bad. But it's a wonderful, wonderful, wonderful business. And these businesses, the public businesses, the better ones, are selling at half what they're worth. Will they recognize it in 2025 or 2026? I don't know. I don't have any idea. But I do know that if I buy them now and I hold them for 5 years, I'm going to have a really, really, really good 5 years. If you want a gamier suggestion, I really like the high-quality rare earth space. Nobody understands it. Nobody cares. There are probably 50 pretenders in the rare earths, but there are, 2 or 3 speculations that while you could easily lose 30% of your money, you could also easily enjoy 20 baggers. And I I sort of like that. I'm impressed with the moves that we've seen in the gold bull market. Gold bull markets follow a predictable pattern. The gold goes first, the best of the best goes next. We're in that third inning, if you will. You've seen the Francos, the Wheatons, the Agnicos double in 18 months. What happens after this is that that momentum attracts people to the whole sector, and you have valuation arbitrages. The best of the rest gets cheap compared to the best of the best, and either value arbitrageurs like me move down the quality trail, or the best of the best take over the best of the rest. And then it proceeds on down the trail. This gold bull market is following an extremely predictable pattern. It's happened 3 times before, and there's opportunity for our attendees to understand where the gold market's going to go and stay ahead of the curve, which is very, very attractive. At some point in time, you and I have talked about this before, when generalist investor capital gets attracted to the precious metal space because of the momentum in gold, silver starts to move. Silver begins to outperform gold. I don't know when it's going to happen. And I think I told you this before. When it happens, you won't need Rick Rule to tell you it's happening. It'll be really, really, really dramatic. At some point in time, the high quality, small silver stocks, more likely than not, are going to rip. Absolutely rip. So we've had a reasonable collection of those here at the conference. And we've told people what to look for, how to buy them, and to be patient. And I suspect at some point in time in the future, attendees will be coming up to me and saying, thank you, thank you.
We will hope for that moment. And I'm going to come back to gold and silver. But before I go down those paths, I want to ask you a little bit more about rare earths. So it's really interesting for me, and I do feel like more people should be interested in that space, but it seems like it's just maybe hard for investors to get a grasp on how to evaluate these companies. And I asked the same question to Nomi Prince this morning, which makes sense because she's on the board of a rare earths company. But when you're looking at these companies, often there's the mining, but also the processing. How do you evaluate?
It's tough. It's very tough for me. I don't have experience in rare earths. What I have, because I've been in resources for 50 years, is access to people who have expertise in rare earths. So my secret weapon is at SCP Capital Partners, Dave Wargo, who was one of the founders of Neo Materials. Despite the fact that he isn't yet 60 years old, he spent 30 years in the rare earths business, and so I cheat. I'm learning rare earths geology as I go. I'm learning rare earths metallurgy as I go. I'm learning as much as I can about the geopolitics of rare earths, the fact that there's a supply chain which is Chinese dominated, and there are political pressures to build a Korea-centric supply chain, a Japan-centric supply chain, an American-centric supply chain, and a European-centric supply chain. This is important because to the extent that the geopolitical strategies force governments, the governments will likely spend some of their own money to develop these supply chains, which will lower the cost of capital for rare earths companies. As a taxpayer, I think that's horrific. As a speculator, I think that's spectacular. The other thing about rare earths that's a little difficult is that thus far viable rare earths deposits, at least from my point of view, as I describe them as viable, aren't in countries that make speculators comfortable. You have to, in my case, be comfortable or as comfortable as you can be in Malawi or Congo or Brazil. That gives a lot of people pause. As you know, Charlotte, I've invested in frontier markets for a very long time. And the consequence of that is that I'm tolerant of the risks given the size of the rewards.
I think that makes a lot of sense and hopefully gives people some idea of directions they can go in with rare earths. So we can go back to gold now. And I know you're not so concerned about what is the price doing at any given time, but I'm curious about what you think could spark the next move higher in gold. We have a lot of people wondering what's coming next, what could do that.
Well, that was well phrased. When people ask me when the gold price is going to move, as you know, I say the year 2000. It's up 9% compounded annually for 25 years. Pretty good record. And they like more dramatic moves, which they've begun to enjoy. My thesis is very simple. My thesis is that the gold price moves relative to people's faith or lack of faith in the maintenance of their purchasing power in fiat currencies, primarily the US dollar. I believe that as a consequence of our debt, our deficits, and the unsustainability of our entitlement program, arithmetic unsustainability, that the U.S. dollar will lose 75% of its purchasing power over 10 years, just like the decade of the 70s. I suspect that the gold price will more or less mirror the deterioration in the purchasing power of the U.S. dollar. Arithmetically, if you believe that there's a causal relationship, if the U.S. dollar declined by 75%, it suggests that the gold price could move up fourfold. Will it be threefold? Maybe. Will it be fivefold? Maybe. What isn't in dispute to me is that absent a real sovereign default, the U.S. dollar has to lose 75% of its purchasing power to make the on and off balance sheet obligations of the U.S. government serviceable.
Well, and speaking of the US dollar, I think at least one person and maybe more has said in their presentations over the last couple of days that the performance over the first half of 2025 has been the worst in decades. So do you expect the rest of the year to play out the same way for the dollar?
I suspect that the deterioration of the dollar relative to other currencies will begin to subside. I think that people have been selling the dollar reflexively because they don't like our president. I don't like our president either, but I haven't been selling my dollars relative to other currencies. I think that in a relative sense, which is to say relative to other currencies, the U.S. dollar will do okay over 10 years. I think U.S. hegemony will decline. Doug Casey described the dollar once relative to other currencies as the prettiest mare at the slaughterhouse. And so I would suspect over 10 years, relative to the Canadian dollar, relative to the euro, relative to the renminbi, the dollar will do okay. But in an absolute sense, what you buy with $1,000 today will cost you $4,000 10 years from now. In an absolute sense, it'll do poorly. In an absolute sense, your audience is going to hate me for this, but the Canadian dollar will do a little worse.
Fair enough. I think they might not like it. It probably ends up being true. And let's look at silver as well. I know I asked you in our last conversation about silver, and I think it was right when the price was kind of starting to move. And you had said, it's pretty confusing, and it's a market that is tough to understand. It doesn't always make sense. But I want to come back to silver because I'm seeing so many questions from people in our audience looking at this move and wondering, okay, they've been hurt before by silver. Is this real? Is this it? And I know you talked about your long term.
It wouldn't surprise me to see silver take 2 years to break out relative to gold. It also wouldn't surprise me to see it happen this fall. All I know is that silver doesn't move until a generalist investor comes to the precious metal space. The generalist investor comes to this precious metal space because of momentum established by gold. When that happens, I don't even know why. I suspect it's because of the lower unit cost to buy silver. But when it happens, it's truly, truly, truly dramatic. I've seen it happen 3 times before in my life. And Charlotte, it's been pleasant. If I have to wait 2 years for that circumstance, I've been on Earth for 72 years. I'm okay with 2 years. But those moves are really, really, really dramatic. And silver has substantially lagged gold in terms of this move, as it always does in a bull market.
So really, we should be prepared, and it'll happen sooner or later, but we should be ready.
It depends on who you are as a speculator. There are some people that have trauma holding a position over a long weekend. They should do something else, buy bonds or something, If you're a speculator, and if you are a speculator who can tolerate perturbations, volatility, if you can tolerate for a time boredom, the setup in silver from a speculative point of view, using history as a guide, is spectacular. The nominal highs for silver are $50, but that isn't the real high because the purchasing power of the dollar is deteriorated. If you did constant dollars, the previous high is probably $80 or $85 an ounce. And I would expect personally that silver handily takes out those prior all-time highs.
Okay, so that's what's going on with silver for now. I also wanted to bring you a question about platinum. Platinum, the price is moving. This is another one where I'm seeing a lot of questions from our audience. And I remember, I don't quite recall how long ago it was, maybe a couple of years ago, you said you were doing a lot of research on platinum and palladium, looking into those spaces. So Did you end up going into those sectors at that time? And what do you see coming for those metals?
I bought a little bit of the Sprott Physical Platinum and Palladium Trust simply because those metals were priced below the total cost of production. And I bought a reasonable amount of a small exploration company called Bravo, which has made what I consider to be a fairly major platinum and palladium discovery in Brazil, one that looks much more attractive at today's prices than it did a year ago. When I looked at investment options to express my preference for platinum and palladium, life got very difficult. Sibanye-Stillwater is the obvious choice, but there are political impediments to Sibanye-Stillwater in South Africa and the ongoing economic reconciliation in South Africa. The best platinum and palladium company in the world by a country mile is Nornickel, the old Norilsk in Russia. But for various reasons, that's a rough place for an American to invest. And so I haven't been able to express that preference, although I do own some suspended shares in that company from the old days. So in terms of being able to express the work I did, I was able to take a reasonable position in the Sprott Physical Platinum and Palladium Trust in the physical metal. And I was able to buy an immodest, which is to say a generous position in Bravo Mining.
Okay. And for the price that we're seeing now in platinum, do you think that keeps going higher, or it's pretty interesting?
When I look at the copper market and I look at the oil and gas market, the softness in energy prices, even as production plateaus, tells me that the economy on a global basis is weaker than we expect. Platinum and palladium are economically sensitive. So and I'm not an economist, as you know, I'm a pawnbroker. If the economy continues to deteriorate, likely that softness will extend to the internal combustion engine sales, car sales, and that could impact platinum and palladium prices. Looking longer term, platinum and palladium are likely still selling below the total cost of production. And there are still substantial supply risks. If you think about it, platinum and palladium come from two places, really, South Africa and Russia. Neither of those places politically are garden spots. Russia is at war, which is difficult. South Africa has ongoing social challenges that haven't yet really manifest themselves, but I suspect will. In the South African mining industry, first of all, the South African government keeps making noises about nationalizing the mine or increasing the social take. What that means is that the mining companies won't make substantial capital investments in the mines because they don't know who's going to own them. And that means that they substitute labor, cheap labor, for capital. They don't invest in capital equipment for the labor to operate. They don't invest in training. And that means that the laborers aren't getting paid enough money to live. The workers' wages have to go up, but the workers' wages can't go up. Because I don't know how that resolves itself, I don't have the courage to buy those. Perhaps the best expression of that would be the shares of Ivanhoe mines, which have been decimated because of their stability problems in Congo. They are bringing on a new mechanized mine in South Africa with 80 million ounces in reserves and resources. So perhaps the best way to express a preference in platinum and palladium, other than the Sprott product or Bravo, would be in the shares of Ivanhoe mines.
Very interesting. Thanks for going into that one. And before I let you go, I've got a couple of questions from audience members. I usually like to see what people want to ask you. One of them is, do you have any scoop on the Ambler Road project in Alaska? So I had to look this up. From what I understand, it got the green light from Trump during the first administration. Then it got blocked by Biden. And now, any thoughts?
I haven't had the courage to buy it. The deposit is a spectacular deposit. In fact, I think it's a district. As you point out, there's substantial local favor for the project, both in terms of the native corporation and state politics. But the Biden administration blocked the access road against the wishes of local partners. Mr. Trump is trying to do so many things at once that I have a difficult time understanding the probability that he gets anything done. In my life, if I've had a fight to fight, I fought that one. I took on that adversary. It's very difficult for me to understand, even granted that he's a person who in many regards is superior to me. If I need to fight one fight at a time, he should be fighting no more than 3. And he seems to be fighting 1,000. So the idea that I could assign a probability to his being successful in any one fight is fairly low.
Okay, very interesting as well. And another audience question. This is actually one that I picked up from somebody here. They're asking me, why am I not talking more about ASX listed companies? So I'm sorry to the audience that I don't usually go in that direction, but they wondered, could I ask you about your top ASX stocks in the resource sector? So I don't know if you can share, but
Sure. I mean, my top ASX story is a rare earth story. It's meteoric. Lots could go wrong, and nobody should buy it until they get their financing done. They need to raise 30 or 40 million bucks. That needs to happen. Get that out of the way. What I like about meteoric is, first of all, rare earths aren't particularly attractive to Australian participants or anywhere else, so it's deeply out of favor. The asset's not an Australian asset, so Australian investors aren't focused on it. And it's an Australian domiciled company, so North American investors aren't focused on it, which is to say it's way off the radar screen. And as I told you, I love hate, if not boredom. So it meets that. It's a deposit with, I believe, at least $20 billion in situ reserves and resources, which is a tier 1 deposit. It would be, were it constructed, at least according to the pre-production studies, in the best quartile worldwide in terms of all-in sustaining costs and in the best quartile worldwide in terms of return on capital, which I love. It's in Brazil, which relative to the countries I invest in is ironically pretty stable. And it's in the good part of Brazil. It's in a part of Brazil that has roads, power, workers, water, all that kind of stuff. It will be at least a 5-year development time frame. So anybody who buys it has to be patient. Bottom line on this, I could easily lose half my money if I'm wrong, easily. And there's going to be lots of volatility, and it's going to go up and down and up and down. But it is a stock that I think, if things go right, could give me a 10-to-1 return or a 20-to-1 return or a 30-to-1 return. I love tier 1 deposits in out-of-favor commodities. I also like an ASX stock called Sovereign, which is a rutile and graphite developer in Malawi. Those are also commodities that are off the radar screen. Nobody cares about them. Again, ASX listed. Australians don't like it because it's not in Australia. North Americans don't like it because it's domiciled in Australia. Nobody cares about graphite. Very few people can spell rutile. And again, it's an enormous deposit. The third ASX junior I like is Centaurus, which is also in Brazil. And it's in the nickel business. And people hate nickel. They've gotten pounded in nickel. I believe it's the best undeveloped sulfide nickel deposit in the world. So those would be my 3 ASX picks. Deeply, deeply, deeply off the radar screen. There's an exhibitor here called Emerald Resources, which I've held for a very long time. I have a huge position in Emerald. Would I enter it in a big way today? Probably not, but I have huge built-in gains. These are people who built Regis Resources, which was one of the most successful Australian stories in the last decade. They're people I've known and done business with for 30 years. Buy and build strategy, superb guys. So that's something that people could take a look at if they're not as fond of hate as I am.
Okay, well, that was very nice of you to share those. Thank you very much. And I will let you go. I know you've got lots to do out there. Usually this is the time when I ask you about the symposium, but of course we're already here. So any final words from you?
Absolutely. Last year we sold almost 200 symposium tapes after the event. The information at this event is mostly timeless. Yes, we name some names, but we tell people how to do what they do. Any of your subscribers who weren't able to attend either online or in person are invited to buy the tapes. The tapes themselves, after you've reviewed them, after you played them, have an absolute money-back guarantee. If you buy the tapes and you don't think that you got your money's worth, I'll give you your money back. It's absolutely financially riskless, just like the conference, just like Livestream.
Perfect. Well, we will have the link in the video description. Thank you again for coming by to talk, and of course for having us here.
Thanks for coming, and thank you for your support of this franchise for a long, long time.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Rick Rule.